little more than a half hour to go from the opening bell on Wall Street. Get a check on the markets right now with Carol Schleif. She's Chief Investment Officer at BMO Family Office. And Carol, why don't we start with the Fed? I think that's front and center right now, part of the reason we saw the Dow at a new high yesterday and so much enthusiasm when it comes to the markets. Last week, the market heard everything it was hoping to hear from Jay Powell and then maybe more. I just wonder, though, if the market is getting ahead of itself and kind of off to the races again, because the question we're asking now is it going to be a 25 or 50 basis point cut? How quickly do they get to these levels? We just heard from Roger Ferguson, the former vice chairman of the Fed. He said, look, expect 25 basis cuts to come in these 25 basis point increments. And maybe they take it slow and wait to look around still. Is that something of a surprise? If that were to happen, would the market be less enthusiastic about that?
The market probably would be less enthusiastic if they did one small cut and then waited. And particularly when you listen to the Fed governors and what they've been saying on the speaking circuit, as they're talking to their local companies, those companies really want the Fed to not only set the framework, but to be consistent in what they're doing. So it's not the start, stop, because that leaves businesses really unsure of what to do and how to proceed. And businesses, when you think about it, have been told for the last 2 years that a recession was around every corner, but they really want reassurance that the economy is actually doing solidly well. Policy isn't just high, it's restrictively high as inflation has come down. And so they really want to see the Fed start cutting. But back to the original part of the questions relative to markets, markets are kind of teetering on that, expecting not perhaps a higher than 25 basis point cut first, just to get that policy rationalization process started.
Yeah, very quickly, your take on whether you'd be putting money to work here.
If we saw a pullback like we saw a couple of weeks ago, any sort of pullback, we most likely would, because we are seeing a broadening in market leadership, which is very positive as well.
Short of that, though, no?
Pardon me?
Short of a pullback, no, you would not put money to work?
Maybe at the margins if I didn't have any in, but we suspect you'll see continued volatility, or especially now through the election, will be very data point dependent. We've got NVIDIA earnings coming out after the close tomorrow. So there's a lot of things that could potentially drive markets down in the short run, and we'd prefer to step in more actively on those sorts of pullbacks.